Bitcoin just ignored the Fed. No surprise there. It is now smashing through resistance. Global liquidity is starting to kick in. The shorts are trapped. The megaphone is starting to hum. We got so much to cover in this video. You're not going to want to miss it. Stick around, crew, because we're going to be covering a lot and more. Welcome back, Crypto Crew. It's your boy Tom here, bringing you the hottest in Bitcoin and crypto action. If you're ready to dive into today's market analysis, make sure you hit that like button. Make sure you subscribe if you haven't already. And don't forget to follow us on X, where we talk about Bitcoin and crypto all day, every day. We are sick on this channel. That's all we do. All right, so the Fed held rates steady. No surprise there. But here's the shocker. Bitcoin completely ignored the pause. Instead of cooling off, Bitcoin fired up and started breaking out within our megaphone pattern that we've been tracking for a while now, okay? So I want to take you to the daily chart. So our first take profit was like at 95.9. It was hit beautifully, and we saw a minor retrace, but Bitcoin didn't even bother to fill the CME market gap. Where's my CME market gap chart? Where is that chart? There it is. Let me tell you something about this chart. This chart is so pretty. I'm talking 3424 pretty. I'm talking Martha Hunt pretty. I got to be careful with that. My girl's in the other room. She hears me talk about supermodels. She says it's pathetic that a guy my age would be looking at supermodels. But hey, a guy can dream, right? But anyway, let's get on to the charts. Okay, right now, like I said, this chart is so pretty. It's really one. Yeah, I should take a picture of this and put it up on the wall. It's just classic. It's gorgeous. So anyway, our first take profit level was triggered at 95.9. We saw a minor retracement, okay? Let's go right up into this level right here. I'm going to go back to the megaphone chart. I don't know. There it is. Okay. 95.9 was hit nicely. We had a nice little retrace, not much of a retrace. Okay. I was really hoping, and I kept saying, I was hoping it would go down to like the 91,000 level so that when this breakout actually occurred, it would have been more violent. But anyway, it's not doing it. It didn't do it so far. Okay, so I have a flag pattern marked there. I want to show you on the 1 hour chart exactly what I mean by the flag pattern. Okay, so I'm going to go over and I want to talk about the CME market gap one more time. All right, so CME market gap was filled on the upper level first. It never filled this gap down here. Now, a lot of people say, gaps get filled, but however, on a healthier, base for the next move in a truly bullish market, a lower gap that doesn't get filled fuels more pain for the shorts. So shorts are going to be forced to cover. Sideline traders, they're going to have to chase the breakout, and that means more momentum. Okay, so we got everything lining up here to get up to that 102,500 that we've been talking about. But we're attacking the liquidity zone right now between 100 and 102. And if we blow through this, the next move could be a really strong, violent move. Now, a lot of people, I hear a lot of people talking about, well, they don't like to chase the marketplace, and I can understand that. But I'm going to tell you a little story. Back in the 1980s, there's a famous trader. His name is Ed Sakakota. And he is just, he's fabulous. He's a trend follower. You could read all about him in Michael Covell's book, Trend Following. I mean, the guy is a legend. He comes up with these crazy, unique sayings, like he used to say stuff like, well, if you want a breath of fresh air, open up the window. Or he'll say something like, everybody gets what they want out of the market, including losses. Stuff like that. It's just, he's not only a great trader, but he's a philosopher. So, I mean, I'm not a trend follower. I'm a day trader, but, it's good to read, other traders, their techniques. And I like to share my techniques, and those traders like to share their techniques. But anyway, I'm going off onto a tangent again. So what I was talking about right here is that we had in the 80s, like there was a story about Ed Sakakota, and what he said was, like it was a coffee market, and coffee was making all-time new highs. And he was with his, junior trader, I guess you could say. And it was the end of the day, and he gets a call from the Chicago Board of Trade, and his broker says, Ed, there's another 10 contracts up for sale right now before the close, a little bit higher than the all-time high. And his reply was, sold. He just bought them. So when a marketplace is roaring, okay, now we're talking about all-time high. So the all-time high in Bitcoin is what, that 109,588. So really, if the marketplace does break that, the lesson of the story is don't be afraid. I mean, buy some more, load up on some more. So that's the whole moral of that story. So anyway, I want to show you this flag pattern on the 1 hour chart. Okay, this is a beautiful pattern. As you can see, the marketplace, it broke out, came up to this high, it retraced right back down to that 95.9 level, 95.7, 95.6 level, and then it broke out. So where's the flag pattern? Now, why I show you this is because I want you to see short-term, how short-term actually can lead to the long-term breakouts, okay? So if this marketplace was truly, really going to head lower, it would have continued from this point. It would have broke below that 95.9 on the short term. It would have done one of these numbers. It would have came down. It would have came down into this area right here, okay? And then what it would have done was it would have turned back up, used this price as a resistance point to back down again and try to attack this low here. It didn't do it, and it kind of faked everybody out. I want to get rid of this little thing here because I don't need it anymore. So I'm going to go over to here. I want to take it off the chart, and this way it's not on the main chart and mess up the main chart. But I wanted to show you that on the 1 hour. So here we are sitting in the megaphone pattern right now, and beautiful. Marketplace came up, slight retrace, bang, right back up. Here was that 1 hour breakout. Okay, so next level that we're really looking at overall is the 107.1. There's going to be some wood to chop at 102.5, and I told you that yesterday for the simple reason that that was the high days. The 109.588 that day made the close at 102.500. So that is a very, very important point. But let's go on to the market structure where we're going to be talking about good old Wyckoff. All right, we talked about this yesterday. We're seeing textbook Wyckoff structure. Bitcoin basically bounced. It was tested. Here was the test zone. It came back. It just touched into the test zone, and now it's bouncing off the test zone, heading back up towards that upper liquidity at that 100, 101 level. Now I want to show you this. Now it looks like these guys did something that you should not do as a trader. They moved their stops, and I'm going to show you as soon as this thing loads up. Originally, the liquidity was right around 100,000, but you see how they moved? They moved to like the 101.6, 106, 101, like that. So they moved their stops a little bit. Not good. Not good at all. As a trader, you don't ever want to move your stops. If your stops get hit, they get hit, and you deal with it, all right? But anyway, so here's the key. We haven't truly jumped across the creek yet, all right? What we're starting to. In Wyckoff terms, jumping across the creek is when price clears resistance with strength. Volume confirms it. So you go look at the volume indicator. If you're starting to see increases in volume as we're going across the creek, you're starting to realize, hey, this is really happening. All right. Now, before I jump over to anything else, what I want to talk about is like some people, text me and go, "What's SOS means help?" No. SOS means it's a sign of strength. That's what it means in Wyckoff. So typically the market, markdown phase is being completely over with once we enter into this area. So 105 to the 109 highs, right? So basically that's when price discovery begins, new price discovery begins. So the marketplace has higher support levels, pouncing the marketplace up to, slightly higher highs. Markets don't ever just go straight up or straight down. If they did, it would be, well, it wouldn't be fun anyway. But we got to watch for the clean break of the 102.5 region with volume. And that's going to be like the official kind of jump across the creek. And we're looking at the sign of strength phase of the marketplace. Now, I want to go over to Ethereum, all right? Because we talked about this yesterday, and I'm so happy to see that Ethereum really has popped up a little bit. And why did my Ethereum chart change? But okay, so let me change. Let me go back. I guess Frank is messing with my Ethereum again, which is okay. I got the 1 hour chart up. I want to go to a 4 hour chart in Ethereum. And look at this thing. Look at this thing. What a breakout, right? I mean, Ethereum was like, everybody was thinking it's on its deathbed, oh, Ethereum, man, it's not taking off, And what I want you to notice, okay, I'm going to try to give you a little bit of a quick lesson here without taking up too much time. But I want you to notice, look, all the down bars. So everybody was selling this, okay? Now, they got a little bit of a reprieve, but you notice they were all shorting. Now, this is a 4 hour chart, right? So look again, down bars to the resistance. Look at this. What is that? What is that? Oh, that's a higher low, okay? And boom, 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 marketplace just took off. Now we're really at a point where we said that 2,000 level in Ethereum that has to go to actually really get these guys all here by the short hairs, okay? They're all selling. They're all expecting a downturn back down to short-term support at 18,004. Will they get it? I don't know. Maybe. Yeah. I mean, but I'm not really concerned about that. Longer term, this thing, once it breaks that 2,000 level up here, like we said, we're probably traveling up to like 2,800, 3,000 before we come off a little bit again, use the 2,000 as support, and then take off closer to that 4,000 ultimate breakout level that we've been wanting in the Ethereum market. So Ethereum's starting to wake up. It's starting to wake up. We said that yesterday. I had pulled up my notes. I said we had that low at 1,385. We kind of broke out of it a little bit. It should be support at 1,600. And it did hold. I mean, did we go down to 1,600? No, we didn't even get down there yet. Let's see something here. 1,007. 1,000. No, we didn't. It just basically rallied once it broke that resistance line, rallied upwards. So any type of reprieve in Bitcoin or Ethereum is really, I think, a great area to buy. You may not get the reprieve, unfortunately. You may not get it, but if you do get it, anything that's down by like the 1850 would be a really good scoop for a short-term trader. Stop loss would be like 1730 or something like that, looking for another return back up to the 1950 level. That's the way I would look at it. All right, so let's talk macro. All right, so we talked about this yesterday. Bitcoin just doesn't move randomly. It does move with global liquidity. And when central banks expand the money supply, whether it's through balance sheet growth or repo ops or rate cuts, Bitcoin responds. We said not instantly. Historically, there's about a 105-day lag, right, between global liquidity and rising Bitcoin. And we said that, by June, we should really see this kicking in. But if we look at this chart right now, we're starting to see that it is kicking in already. They completely ignored the Fed. They just ignored this completely. They didn't care about it. Why? Because other marketplaces are showing that they're adding liquidity. And right now, we're seeing early signs of that wave coming in. In fact, the fact Bitcoin didn't dump on the Fed holding rates steady tells us something big. The market's starting to anticipate future liquidity. So once that's in full force, we're talking new highs. So you got to buckle up. So really, Bitcoin doesn't really care where the liquidity comes from. It all flows into the same river. So it makes no difference, And I want to show you one thing with the Eurobond, if Frank didn't change my chart again. Let's go over. Yeah, finally. Okay, you didn't mess with my chart. Okay. You want more proof liquidity is on the way? Look at the Eurobond. Germany's long-term bond is signaling clear expectations of rate cuts by the European Central Bank. Yields are dropping, and the bond market is whispering more easing ahead. And guess what? That means more liquidity, not just in Europe, but globally. And like I just said, crypto, the market itself, doesn't care where the central bank opens the tap. It all flows into the same river. And that liquidity spreads to risk on assets like Bitcoin and Ethereum. They're poised to lead. Also, XRP had a nice little jump from that 208 level. Where are we now, right now in XRP? Like 221 or something like that? 220? I follow that for my kids. Like I told you yesterday, like they like to trade that XRP stuff. 221. All right, so maybe they're doing all right. Hopefully they held on. All right, so let's talk about something else really quickly. All right. We're going to talk about the fear and greed index in greed right now at 65. Okay. It's in the greed zone, but nowhere near the euphoria levels when it's above like 87 or 90. So it tells us something critical. The market is not at extreme optimism yet. We're not at that blow off top level yet. There's still room to run. Now, you're going to want to look at another indicator. We want to look at the coin glass bull market indicator. Okay. Right now, what is that saying? Well, 0 out of 30 metrics they track on chain signals, derivatives data, macro indicators. 0 are flashing. 0. Now, it's been like that for a while. It's been like that even when Bitcoin was trading, when everybody thought Bitcoin was going to dump, when we went down to like, that 75,000 level. This thing was 0. So right now, it's freaking right, So anyway, finally, we look at the Bitcoin funding rates. We look at the Bitcoin funding rates, and they're still historically low. They're not negative anymore, but the marketplace is still basically trading short. So, it tells us that retail's asleep. No fear of missing out, pile on yet. In fact, the breakout is being driven more by spot flows and institutional demand, and that's how we like to see it early in the cycle. This isn't a top. This is like still in ignition phase. Now, if you didn't buy it lower, okay, you didn't buy it lower. You got to deal with it, right? But if you're looking for some type of reprieve, you maybe we get a bounce back down to let's go to Bitcoin here. Go to the Bitcoin CME chart, like here. Where is my Bitcoin? I want to get a price level for you. Okay. Maybe you get a bounce back down to 96, maybe. All right. But like the Sakakota Story, I told you, a marketplace is never really too high to buy it if it's in an uptrend, and it's never too low to sell it in a downtrend. Right now, we're having some trouble at that 100,000 level. They're protecting the shorts. I can understand that. They're defending the position. We may, if I'm going to look at my notes right here, I have supports right now at 96,000. So short-term support I got right at 96,000. If you do get a reprieve there, I think it's a good level to buy, in my humble opinion. Right now, Ethereum, I think that a good short-term level to look at it to buy, like I said a little earlier, I think I talked about, let me get a little bit deeper in it, would be around that 18, like 50 level. I got support now in Ethereum at, 1,600. It's still there. It hasn't changed much, but if we get through that 2,000 today, you may see like higher levels, and you might have to wait for a higher low to occur to buy it. All right, before we wrap up, crew, I got to make sure that you are familiar with our crypto. I don't know why this thing keeps doing that to me.
Bitcoin, tracking the money printer like a shadow.
Somebody's got to teach me how to keep this stupid thing subscribed. Yeah, I just subscribed to the channel. But anyway, there is our crypto community. We got a link in the description that you click on the link, takes you over to the site, and really everything that we're going to be doing in that is going to be completely free. We're going to be talking about alpha. We're going to be talking about, let me go to this chart here. Let me pull this up right here. That's just so I can show you the link. kind of try to be somewhat professional right here. Let's see more. What's going on with this thing? What's going on? Okay, doesn't want to do it. Doesn't want to do it. Anyway, there's a link in the description below. You can click on that link. It'll take you over. You can sign up for our trading community. Like I said, it's completely free. We'll be talking about breakouts, setups, long-term gens, Livermore, cylinder patterns, Wyckoff, all that stuff. Now, also in our description, we have our trusted broker, and I can't show it. You can check out our trusted broker in the link below. Trust me, it's there. Low fees, fast execution, and perfect for our strategies. So join our crew, level up your trading. Let's stack those profits together. So that's it for today's breakdown, crew. Make sure that you head on over to X. Follow us on X, where we talk about Bitcoin all day, every day. Also, always trade with your head, not over it. Do your own research. And remember, as a short-term trader, enjoy the party, but dance near the door. Cheers.